Last time we did double entry system, and today we are starting from same point, and we are doing some more transactions, more entries. Or as I told you, first is as usual your starting business, some investment transactions. Okay. He invested only cash in the business. So two transactions are involved over here. Number one is cash has increased in the business. So plus, and I told you started business means your capital. Capital has also been an increase in the business. So cash will be debited by 50,000 and capital also increase in the business. Increase in capital is credited. So capital A is credited 50,000. Only two transactions are involved in this entry. Okay. Whatever is increased, we will apply increased rule. Whatever decreased, we will apply decreased rule. In this transaction, both titles have been increased. Okay. Cash belongs to asset, increase in asset debited, cash debit. Capital increase, increase in capital is credit. Now, we are going to do one more investment transaction, but in that transaction we will have more than one assets in the business. So that if I told you, okay, if there are more than two titles involved in your double entry system or general, that entry is called compound entry. Compound entry. Okay, and we did it last time. We are doing it again.
Sir, Assalamu alaikum.
Alaikum Assalam. Good name?
Sir, Aisha.
Aisha, this is our level, this is our O'1 class. Your class was, yesterday, but yesterday was off. So we will meet inshallah on next Monday, and that will be your exam date. So we will talk after this class. I will talk to you. Okay?
Okay.
Okay. Thank you. Allah Hafiz.
Allah.
He started his business with cash rupees 20,000 and a van for rupees, let's say 70,000. So here now three titles are involved. three titles are involved: cash and a van. Two, he started his business. Capital. Three. So cash increased, van increased, and started business is your capital. Capital also increased. So your entry will be cash debit 20,000, van 70,000, and capital will be total 90,000. This is your total investment of 90,000. So this is called double entry system. More than two titles are involved. There are three titles in this particular transaction. And when you have more than two titles, it is called compound entry. A started his business opening a bank account and a shop of rupees 75,000. Right? This time, Mr. A started his business with cash, but cash was deposited very first day in the bank account. So you will add this bank account. Bank account has been increased by introduced a shop, increased and started business. That is your capital increased. Okay. Increase in assets debited and increase in capital is credited. So this time your bank will be debited with 50,000. Your shop will be debited with 75,000. And altogether, this amount is equal to 125,000. So capital A is 125,000 credit. When your cash is deposited with very first day in the business in the bank, right? So we don't debit cash, we don't consider it cash, we consider it as a bank account, okay? Because very first day he deposited the amount in the bank, and from that day he will do all the transactions through his bank account. So bank was increased. We introduced shop also in the business worth 75,000 rupees. Altogether, it equals to 125,000. So capital A is 125,000. This is also a compound entry. Three titles are involved. Compound entry. In this activity, Mr. A bought goods, and when you buy goods, it is called purchases, and purchases increased. And when you buy goods for cash, the cash goes out of the business, it is decreased, right? So your entry is purchases debit because purchases is your expense. Expense increases, it is debited, right? So purchases debit, your cash is asset. Asset has been decreased. When goods are bought, they are called purchases. When goods are sold, they are called sales. Mr. A this time sold goods for cash rupees 4,000. When goods are sold, they are called sales. Sales increased. On the other hand, cash also increased. Cash coming into the business, it's your revenue. So sales belongs to revenue. When revenue increases, it is credited. Asset is increasing this transaction. So cash is your title. Cash increase with cash rupees 4,000. Sales increase. Sales is revenue. Increase in revenue is credited. In last entry, you bought goods. That was your purchases. In this transaction, you sold goods. And when goods are sold, it is called sales. It is called sales. And when sales increase, it is credit. On the other hand, cash is coming into the business. So your cash has been increased. Increase in cash or asset is debit. Okay, this is your credit entry. Yesterday bought goods on credit. On credit, then Mr. B, it is your liability. Liability is increased, right? And you bought goods, that is your purchases, and purchases increased. So purchases debit by 5,000 and your liability also increase. You bought goods from Mr. B and that is your paid payment. A person from whom you buy goods on credit, that party or person is called trade payable. So liability increase in liability is credited. You have written the name also. Name is important. Last time I told you, I am telling you again. Your name is very important because you buy from different people. So your name is important in future. You will have problems if you don't record the name of the party. You wouldn't know how much you have to pay, how much you have already paid, and how much you are going to pay in future. But if you write name of the party, it will be easy for you to remember how much you have paid and how much you are going to pay in future, how much you have purchased. This is your credit entry, okay? On credit, on credit. This is your credit entry. Last time you did cash entry. Cash was involved in this entry. Your cash is not involved. You have bought it on credit, so your party is involved. And when the party is involved, you have to write the name of the party. Trade payable, B. B is your party. This is again your credit transaction. Mr. A sold goods to Mr. C on credit. On credit, the for rupees 2,500. When goods are sold, they are called sales. And you see and you sold goods on credit, right? That is your trade received. The good to whom the goods are sold on credit, that party or person is called trade receivables. This is your trade receivable. You have sold goods to Mr. C on credit. Assets. This is your asset. Asset increase, debited, trade receivable increased by 2,500, and your sales also increased by 2,500. This is your credit entry. This time you are selling goods. Last time you bought goods on credit. This time you are selling goods on credit, right? Cash is not involved here. Party is involved, and the party from whom you buy goods is trade payable, and the party to whom you sell goods on credit, that is your trade receivable. Here, trade receivable increase, trade receivable is your asset, increase in asset is debited. Your goods were sold. When goods are sold, they are called sale. Sales also increase. Increase in sale, increase in revenue is credit. So this is your credit entry. We did 8, 7, 8, perhaps 10 entries today, and they all are, you know, your day-to-day transactions in your practical life. How they are involved, what transactions are involved, what do we do with that particular transaction, uh, what titles are involved. They kind of entries you must remember, you must learn by heart what is happening in that particular activity or that particular transaction. I told you many times, I am telling you again, you have to do three things. First, you have to remember the titles, what titles are involved. Two, where they belong to. It means what account they belong to, asset, liability, capital, expense, or revenue. Five accounts. Third, what is the rule for that particular account? Three things you have to analyze in every transaction. Transactions is given to you, details are given to you, and you have to go according to your rules, according to your titles, according to your accounts. If you remember these three things, accounting will be easy for you. So this was your double entry system. Next time, inshallah, we'll do some more entries and with different techniques. Sometimes, you know, you give discount to your party. Sometimes you receive discount from your party. Sometimes you return goods, defective goods. Sometimes defective goods, damaged goods are sent back to you. In those cases, how do you deal with those transactions? Inshallah, we will do in next classes. Next class is your test, and that is your zero term exam, and you have to be very careful about it. There will be two parts. One is MCQ, second one is structured paper two, and in paper two you will have 20 marks questions, and in paper one MCQ as usual 10 marks, altogether 30 marks. And if you practice all these transactions, I hope inshallah you will do your paper in a good way. Thank you very much. See you next time, inshallah. Allah Hafiz.